All right, guys, we had a good market bounce today. Bulls acted like they were back in control of things. There was a couple of attempts to try to sell it off, but overall, I mean, it was a pretty good quality day for the stock market. The S&P 500 and the Russell 2000, mainly the latter, the Russell 2000 was the one that led the market higher, but we had the NASDAQ that led that pretty much lagged overall price action. That was also because of price action in the Apple and some of your other FANG stocks. Also notable too is that you still have the seesaw effect going on all year long, where typically when the Russell 2000 is really strong, the NASDAQ tends to lag, and when the NASDAQ's really strong, the Russell tends to lag. And that's why you've had so much issue with the breadth this year in the market, where you'll have NASDAQ and the S&P 500 printing new all-time highs, but then you have like the Russell lagging, and you get these horrible breadth readings like 2-to-1 or 3-to-1 to the downside. So it's made it very, very difficult to get a cohesive rally with everything rallying at the same time. Very rarely do you see the Russell 2000 and the NASDAQ rallying very strong together. It just doesn't happen all that much. So what I want to do today is really just keep highlighting the theme all week long. We've had some significant selling in the stock market overall. All the indices have been taking hits. Want to look at, okay, are we at what looks like a bottom in this market? Is this just a typical pullback like what we saw in September and like what we've seen multiple times like in July of this year? Is this a typical pullback that's just going to go right back up to the all-time highs? I'm going to give you some pros. I'm going to give you some cons. I think the jury's still out overall whether or not we've hit the bottom. I tend to think, if I'm being honest, we're probably got more downside. I have a hard time thinking that we've seen all of the action. The biggest reason why is because of the tapering. I don't even really care so much about the Omicron issue going on as it pertains to the stock market. But as it pertains to as tapering and the Fed increasing interest rates or raising interest rates faster than what anybody expected, I do think that's a big problem for the market going ahead. Because if you go back to 2018, it almost created like a nightmare scenario for the stocks. I mean, it sold off hard and fast. I think it was like something like 30% we sold off back in Q4 of 2018. So make sure you guys put all of the questions that you have in the comments, whether you're watching on Facebook or YouTube or Twitter. Put them there. I'm going to go over your charts, but I'm also going to go over a lot of the indices here and some of the indicators that I'm following to get a little bit of an idea of where this market might be going as we proceed forward in the days and weeks ahead. So let's get into it here. Let's pull up the S&P 500 chart. Talked about this on Tuesday. I did a video last night. I highlighted it again, maybe at the expense of getting a little bit too redundant. I've been talking about this massive price level support, and there's not a lot of support in this market right now in terms of just like really clear cut support until you get down to this rising trend line. Even then, it's only two tests really of this rising trend line, but it does create a nice channel to work off of. So support lacks in this market. So we're having to really piecemeal it together almost in a sense, because for so much of this year, it has done nothing but really just go straight up. And if you were to look at where the most support exists, it's probably right here, going all the way back to July of this year. So that's your biggest support. Every other support level, it's onesie twosie kinds of retests from in the past. So right here, previous all-time highs, those oftentimes will be a short-term support level. It's pulled back to it yesterday, broke below the 50-day moving average, but reclaimed it today. 50-day moving average is significant because if you just go back in recent history, how many times have we tested? And usually it's like a break below the 50-day moving average intraday, or actually a slight close below it, and then the following day it just recaptures it. So we have that. We had that back in July, and we had it back in June, May, multiple times in May. You go back to March, you had it. And I know some of you guys can probably recite these from memory because I've mentioned it so many times. You go all the way back to 2020, June of 2020, you had instances. I mean, yes, there's instances too where it breaks below it, but it never really spends too much time. We don't really get too many corrections below that 50-day moving average. We did have one, and this is probably what's given me the most pause in this market right now, is we did have one in September and October. And the reason why that does become significant when you do have breaks is because it weakens the legitimacy of that support. So while we've had many occasions where we've held at the 50-day moving average, there's plenty of occasions, or there's this one occasion that does weaken it some. So had this not happened and we had just had nothing but constant bounces off the 50-day moving average, I would have been all in on the market today. Hands down, I would have bought it. I didn't. And I still want to kind of see, where are we going forward here? We saw a little bit of weakness creep into the close. Still below the 5, the 10, and the 20-day moving averages here. That's highlighted by this yellow, orange, and green lines. And going forward too, if we get a move back up to all-time highs, we've already shown that the market really struggles with this overhead resistance right here. So that's also something to keep in mind. That's going to limit your reward if you're playing the ETFs, or if you're playing individual stocks too. They're going to be affected by the fact that if the S&P 500 does retest it and not able to break through this rising channel, which is very, very difficult to do. It's a very rare thing that you actually see it happen. It's going to limit the reward in those too. That's why I'm very much in favor of getting a significant pullback in this market. That doesn't make me a perma bear or somebody who hates to see stocks go up. I really don't even short that much, but when the opportunity arises, I usually don't mind pulling the trigger on a few short plays. But out of a pullback, you're going to get a really nice opportunity to buy some stocks at an incredible discount. So that's the SPY for you. I'm also still going to get into the Qs. I'm going to get into Russell, the VIX, and some of these others, but I want to get to some of your questions here real quick. Let's see here. We've got, I'll kind of position myself just above the question there. Some of you guys mentioned in the last one that you guys couldn't see my face, but can you please tell me what you think of the daily chart on F and QS? Good question. So for Ford, it's actually done really good withstanding a lot of the pressures from this recent selling. You have essentially like a sideways channel here, and you got two patterns here on Ford to watch. And it has stayed within it. It hasn't broken down like what you've seen some of the indices and a lot of the stocks do. And it's also been receiving a lot of favorable press with the F-150 and some of these other vehicles that they're making going electric. So electric's a hot stock to be, or industry to be invested in right now. So Ford's definitely is getting some of that benefit. It needs to break out of the sideways channel to really have a breakout at this point. Do I want to buy it inside the channel? No. There's two places where I would consider playing it, okay? The market recovers, and we can get a breakout above this. I would say it's probably going to be around 2055, 2056. If it breaks out above that level, then that's a good opportunity to get long. But ideally, if we're looking for the ideal scenario, maybe a pullback. Yes, it would nullify the sideways channel, but if you could get a pullback to this rising channel, that would be a pretty cool opportunity to play that bounce right there. Now, as for QS, pulling back to some significant support there. And this was one that has been on my watch list for a while. I never actually got into it though, and there was a couple times where I left my head scratched. I was like, man, why did I just not pull the trigger on that one? But there's also been a lot of concern over the course of November and December about this market getting a little bit too overheated. But you had the nice breakout and it's pulled back to support here. So this pullback to support, you want to start looking at, okay, are we going to bounce off of this massive support level? It's really nice for anyone watching. I would definitely add this to your watch list because it just really does look nice. And one worth watching. So if the market does bounce and we're in the bottom here, this is one that you might want to play. Watch to see whether or not it can break back above that 5-day moving average, which is the yellow line here. And you might have a pretty good runner on your hands. Very volatile. Always use stop losses though. And for stops, I mean, it's probably going to be below this declining support level here. So give yourself a little bit of room because it is sloping lower. Good question. Let's see. Good evening from Lakeland, Florida. Hello to you, Kevin. And Swipe also says, hey, Ryan, nice relief to see the Russell bounce. I agree. We'll talk about the Russell here as well. Okay, so going out to about a year, this is the channel that I've been talking about, and I'm almost hoarse talking about it so much. But this channel has been incredibly important to follow. Talked about this all week long, testing major support right here. Got that bounce. I even mentioned last night, this is like a do or die moment for the Russell. If it breaks below and you get a significant break below it, then you're looking at what's probably a topping pattern. There's not a lot of support down below. I mean, you're looking at maybe conversations of sub 200 before it gets any kind of real support or real bottom into it. So it held that support level today. That was critical, but it doesn't necessarily mean that it's out of the woods. And do you buy it at this point? I mean, you can, but you got to believe, have some reason to believe that it's going to break back out of this channel here, which it has been stuck in except for about 1 month this year. It has been stuck in this sideways channel, and it's at the lower end of it right now. So top end, it's about 231. Bottom end, it's about 213, and it's trading at 216. You can get about a 2-to-1 return for it, so that's not too bad. But I don't know if that's like the best reward to risk ratios that you want to look for. If you're expecting this market to bounce hard and fast, you're probably going to want to look at some better setups that are going to give you maybe a 3 or 4-to-1, because the more the stock market declines, it gets closer to a bottom, right? I mean, that the further it falls, the closer to a bottom. It's just like us as people. The older we get, the closer we get to dying. It's kind of a dark way to look at it, but you get the point. So the more it falls, though, the greater that bounce is going to be. It's kind of like a rubber band effect. The further you stretch it out, it's going to snap a lot harder when you let go. So with the IWM, or with this recent market sell-off, we've gotten a little bit more selling than what we've seen of late. So you're going to get a little bit more of a snap back if this is truly the bottom. All right. So that was a good question. Let's see. Rage TV asks, TIGR, great fundamentals, but very being down. Any thoughts on it? I don't have any initial ones, but I'll take a quick look at it here for you. Yeah, I mean, it's broken that long-term trend line there. I don't really see anything that's suggesting to me, okay, this is a screaming buy right now. And if you look here, also you've got a declining channel there, so it needs to break itself out of this declining channel for it to have any chance to the upside. Right now, it's stuck in a downtrend. So in the downtrend, you don't want to be long in a downtrend. You want to start getting long on something when it starts to change the trajectory, when it starts to change its slope, starts to break above declining trend lines. That's where you want to get long at. So, and let's look at also this VIX, the volatility index, because I've been talking about this one a lot as well. You have a clear area of resistance here, and it broke through it yesterday. It's back down below it today. So like what I was talking about on the S&P 500, the more that resistance breaks or more that support breaks, it doesn't become as important per se. Okay, so we're above it, we're below it. We had seen many a times in the past, including just a week ago, last Friday, where it was traded right up to it before it pulled back on Monday. But it broke through it, so that's a good sign. But the other thing, too, that I noticed about the VIX, it didn't pull back much today. And I would have thought that we would have probably gone maybe a little bit more of a pullback, especially when you're considering how much the S&P 500 was up today. We're talking 64 points, up as much as 81 at one point. But it really didn't give up. So it's almost like it's telling you, hey, we're not out of the woods yet here. There could be some more downside. And the more this one rises, I think it's going to signal to you just how much panic there is in this market. Again, today, I think it would have been very good to see this thing collapse for the bulls. It didn't collapse. Yes, it gave up 10%, but this thing could easily have gone down 20 or 30% on a normal trading session where we're rebounding off of a significant pullback. So that's something you want to keep in mind as well. Plus, you got these two declining trend lines that they broke above, still staying above it at this point in time. It's not trying to retract back down below 20 at this moment. So, yeah, Microsoft sold off into the close. Let's take a quick peek at that one. And tech stocks as a whole really, really struggled. So that wasn't a really good thing. So here's the thing. A lot of times when your market does bottom, it's usually the tech stocks that are going to lead the way higher. That's going to be like your Apple, your Microsoft. Apple got hit with a headline today about diminishing demand for the iPhone 13s. So it was down as much as like 4% at one point today, and then it managed to almost rally back to break even. Now on Microsoft, you have what I would probably say a bit of a head and shoulders pattern here. You have a left shoulder, a head, and then you have a right shoulder. And it hasn't quite confirmed it yet. And I didn't even almost see this until just the last couple of days, but it's very close to breaking it. So you have the resistance above that it's not been able to withstand or sustain any kind of rally above. You got the left shoulder, head, right shoulder, very close to breaking. Another one that has that similar price action is Netflix, except it's more of a double top than anything else. It finished red as well, zero bounce out of that today. That one's confirmed and it's already pushing lower. So good point on the Microsoft. It's not really rebounding as much as I think most people would like to see. Let's look at oil and gold. On this platform, I got to look at it through USO, which is basically, and I don't think it's the best measure of how good or bad oil is, but from an ETF standpoint, that's what we got to work with. Overall, though, I mean, it bounced off of this massive support level, and that goes all the way back to March of this year. Support held. You still have a series of higher highs and higher lows, so that's also good. But it's pulled back to the support. It's held. It went up to about 2.6% today, back above the 200-day moving average. If you're looking to play oil, the way I would be playing it right now off of USO would be a break below this major support level. I would be out of it. Okay. Now I know that kind of looks like I have to take a dark stand on all my, or a dark outlook on all my trades. The reason for that is because I'm true to my word when I say I plan how I'm going to get out if the trade goes wrong before I ever get in. So I'm always looking at, okay, what's my exit if this trade doesn't work out? Because I try to just, consider myself lucky when the trades work out well. And I want to make sure that assuming the trade goes bad, that I have a good reason or a way to get out of it. So yeah, so I'd probably play it below the support here. If you want a little bit of a wider stop loss, go below the August lows. That's going to be a much more significant stop loss, but you're going to have to increase the risk a lot, and you're going to have to expect more reward to justify that kind of a risk. You got an unfilled gap right here. Okay, this goes back to 1126, so we'll put a little square right there so we can know what we're talking about. That probably needs to get filled at some point. You have a little bit of I wouldn't even call that resistance at this point, but lots of opportunity for this thing to move all the way back up to 54, between 54 to 57, 58, before running into any real major resistance. Again, oil right now is a little bit of a headline risk. You have, discussions about increasing output in the Middle East. And you have, strategic oil reserves being released here in the United States. So there's a lot of headline risk that can affect oil. Oil tends to be one of the more volatile sectors. So keep that in mind. One of the ones that has intrigued me a little bit of late has been SLB. I'll pull it up on this chart here. You got this massive support level. This could turn bearish. I mean, it's almost like a head and shoulders pattern. Left shoulder, then you got the head, and then you got the right shoulder. But as we've seen many times on this chart, it keeps bouncing off of this massive neckline here. So maybe it's not the time for it to sell off. And if it's not, that could be a good bounce play in conjunction with this USO. You can always use stop losses, man. I mean, there's no sure thing. A lot of people tell you, somebody's right 95% of the time. That's very, very sketchy when people say that stuff. But even if you're right 95% of the time, it takes one trade to just mess up a lifetime of good trading decisions. So, and gold. So it broke below this rising trend line here. It had tested it last week. Looked like it might try to hold it. Didn't. It broke below it. That's why we use the stop losses. Because as humans, we're going to be wrong. We don't have a crystal ball. God didn't give us that when we were born into this world. But nonetheless, we want to make sure that we're protecting ourselves and from what the market wants to do to us. So at this point here, I would say maybe we get a big support bounce off of 162. It's at 165 right now. That would be a good place to maybe test the waters at right there. It's kind of surprising to me that gold is not bouncing at all, because all the talk is about inflation. So I think one of the things that's probably hurting gold is that, yes, inflation is here, and yes, we've seen some pops, but we haven't seen major pops out of gold. But the other thing too is I think it's doing a better job of pricing in these Fed interest rate hikes ahead of them actually happening. It's pricing it in, and it's doing a better job of doing that than it did of pricing in inflation. Manuel, glad to have you here. So the reason why SPY has been doing so well of late is because of the NASDAQ 100. I mean, if you look at SPY, let's pull it up on the monthly chart, right? It had a bad September. All the indices had a bad September. But yeah, it's done really good. But why is that? Look at the Qs. It's doing amazing too. It's kind of green right now in the month of December because of today's bounce. Qs couldn't keep up because your big tech stocks have lagged, so it's still in the red. SPY's in the green. IWM is actually in the green on the monthly chart as well. But all of these are just barely in the green, at least SPY and IWM. The reason for it is because the FANG stocks play such a critical role. I think the top 5 or 6 stocks in the NASDAQ 100, it comprises of 100% of the value of the NASDAQ 100. 5 stocks comprising 50%. I think there's about 5 or 6 stocks that comprise of 30% of the S&P 500. I think it's the top 10 stocks of the S&P 500 comprises about 30% of the S&P 500. So it's very disproportionate to big tech. So that's why when Apple sells off and Amazon and Google and Microsoft or Tesla or Nvidia, these things have major impacts on the market. But because they've been doing so well, it's been pulling the SPY up, it's been pulling the NASDAQ up. But because there's none of those stocks in the Russell 2000 or in the small caps, they've all been bleeding because when they put the money into the big techs, they seem to be leaving the small caps behind. And yes, I would agree with you. You know, the market is not as glorious as big tech makes it out to be. Most of your stocks, as indicated by the T2108, I mean, 27% of stocks are trading above their 40-day moving average. Even when we are hitting all-time highs, just last week, guys, I mean, less than 50% were trading above their 40-day moving average. So there's a lack of participation in this market. It's been that way for a very long time. Look at the T2107 here. This is this percentage of stocks trading above their 200-day moving average. Steady decline for over a year now. Going back to December of last year, this thing has been on the decline. What happens when it's on the rise or when the market's rallying in the past? It usually rises pretty good. So thoughts on Disney? PLTR and Facebook. All right, we can do those real quick. Gosh, if you look at the monthly on Disney, though, it looks horrendous, right? Almost think that maybe on the monthly, there's a chance that we could see this gap fill right there. You don't see a lot of gaps on monthly charts just because it has to have a big move on the first day of the month to create a gap. But on the week or on the daily here, I'd probably say the same thing. I mean, it almost that I said on the monthly. Maybe at the start of the gap, that's where your support lies. Let's see if I can draw this real rough here. That seems to be where you have some support. I didn't draw very good. Yeah, some support here. I mean, it's not perfect support, but you can see here. And I mean, even if I go back we're going back to 2019, there's some support here. So here, again, here, and then you have the gap higher right there. So I could see a move back down to 135. I don't think this is the time to buy it. These V-shaped bounces are very hard, and we've seen plenty of V-shaped bounces just even looking at the Disney chart, like what we saw back in May. V-shaped bounces are very hard because it's better if it bases out. Those are my favorite ones. I love playing base breakouts, kind of like what we saw with QuantumScape. This is a massive base. Now, I'm not asking for it to be that big of a base, but a 4 or 5 day base can do wonders for helping you gauge the reward to risk ratio or whether a stock has actually based or bottomed out. Kamal asked, do your trade alerts in your membership? Yes, in the trading block. You get all my market research if you click down join below, which actually supports this channel. You could join up below. You're going to get the most intriguing charts I come across each day, watch lists, master watch lists for the week, and updates on the FANG stocks and the S&P 500 as well. Russell's in distribution. Yes, I would agree. It's been in Russell. The Russell's been in distribution for about a year now. It tried to break out, couldn't really sustain that bounce or the breakout for very long. So now we're looking at a bounce play off the lower channel band. Let me just pull up the chart to show you again what I'm talking about. Breakout couldn't sustain itself. Now it's pulled back to the lower channel band. All right, you guys, there's a lot of love coming from Orlando here. Guys, I'm doing a meetup over at the AC Sky Bar in Orlando, downtown Orlando. Free drinks, sponsored by StockTwits. Free drinks and food. Come there Monday, 7 o'clock. Love to see you guys there. Love to see some faces. I only see people online. It'd be nice to actually see people in person too. Great books to read for technical analysis. I would always say go with Reminiscences of a Stock Operator. It's about Jesse Livermore, my favorite book of all time. There are so many quotable passages in there. It looks like I underlined the whole book. Definitely read that book, Reminiscences of a Stock Operator. It's a classic. Victor, how's it going, Victor? IBM, you can take a stab at that one there. Looks like real deal for the next 10 years as a solid aristocrat. Okay, IBM. This is one of, to me, I think IBM has been one of the hardest stocks to trade for so long now. I mean, it's almost like AT&T in the sense that it hasn't really moved. And this is a chart going back to 2000. We're at the same place as we were back in 1999, 2000. I kind of feel like the sun has set on IBM. I don't think I would ever buy it off of a correction in the market. Maybe you could say, well, we're sitting on this rising trend line, but if you zoom in on it enough, we're kind of below it. Yeah, I could recover that, but it's also, I mean, a lot of resistance overhead as well. So even if you bought it right here, long term, maybe you have a rally that takes you up to 145. It'd be good, but from a long term investment, I think we can shoot for better. Ryan Girk likes the Girky. I hope I said that right. Bell Mead, yes, Bell Mead is good. That's a solid one. Hedge prep for second depression, running good so far, but sometimes too good to be true. All right, I was reading that one to myself there. My bad. Veil. A little bit of a expanding megaphone action there, right? No, maybe not. I'm looking at these charts real time with you guys. Sometimes I haven't looked at these particular charts that you guys ask about in a long time. Veil being one of them, but massive expanding megaphone going back to 2016. Good grief, I'm looking at the weekly too. But so you got that weekly perspective. Inverse head and shoulders pattern, though, you could say. Now, this is a stock that's also traded mainly overseas as well. So you're going to have a little bit more of gappage in the prices because when it's trading overseas, it's reflecting that at the market open here. Left shoulder, right, or yeah, left shoulder, head, right shoulder, trying to break out. So I think there's a good reward risk opportunity there. Probably stop loss is going to be below this moving averages right around here. So that's going to be about what, 1211, 1210. Playing the breakout. I don't see a lot of history with this 50-day moving average. Well, you got a couple right there, but I don't see it. I don't see it as being significant. So still may be worth, just because it's so close, to wait for that breakout, especially if it can consolidate over the next couple of days before actually breaking out. But yeah, there's definitely some potential there. I mean, I could see even going up to 16. You got some resistance here at 16 right there. That could be some resistance overhead. So you got the reward to risk ratio in your favor. Nice inverse head and shoulders pattern. See if it breaks out. I mean, it's definitely one worth watching. I'll add it to my watch list as well. Good stuff. Tesla about to break down from the triangle. It's testing it, guys. I mean, I think I had it on this chart here before. No. Testing it. Hasn't broken down yet, but I do think if it breaks out of this triangle, we're probably going back down to 900. A lot of people don't want to hear that, but I mean, there's not a lot of support outside of this 982. So maybe it hits 982 and it can bounce back up. If it does, then you're more like in a sideways channel rather than a triangle pattern. If that can't hold, then yeah, 910, 900 range is probably the likely destination for it. All right, and let me make sure I got. Oh, let's look at DWAC here. A lot of people are jumping back into. I would not be jumping into this thing. I mean, just from a personal standpoint, I am not a big fan of trading this. This is such a pump and dump kind of trade action here. I mean, look at this. 2 days way up, and it's just completely fallen apart ever since. The one that was real big though today was a CFVI. There was some news out on it. Only finished 8%. I mean, these are pump and dumps, man. These are the people that are gotten in right here. They're stuck in their trades, and they're pumping it up so they can get out here. They're selling you their shares, that you're wanting to buy to drive this thing all the way up to 13. I mean, you bought it at the open today. You're sitting at like a 30% loss. It's just not worth it. So stay away from those things. All right, guys. Make sure to keep supporting this channel. I appreciate it. I love doing these live streams. I'm aiming to do it Tuesdays and Thursdays. I'm still trying to get the feel for it because I haven't done a lot of these on YouTube before, but I'm really starting to get the like for it, the liking for it and enjoying it. So make sure to subscribe to the channel, get the notifications because that'll tell you when I'm going live. I'm not quite sure the time that I want to use. I've been experimenting with different times so far, but it seems like the 4:30, somewhere between that 4 and 4:30 time frame has been pretty good with you guys. So definitely keep tuning in and watching these. I appreciate it. I love your questions because just like what you saw with Vail, gives me some good stock ideas to work with as well. So we're like collaborating here and working together. Don't forget, if you're in the Orlando area, though, come to the AC Sky Bar on Monday. December 6th, and we can all meet up, drinks on StockTwits, and it'll be a fun time. Take care now.